It's my pleasure to provide potential investors, shareholders and other parties a bit of an update on some pretty exciting news for Kalamazoo that's occurred this week. So without any further ado, I will turn on the presentation. Okay. So hopefully that's all what everyone can see now. Yeah, what you're looking at there is the actual existing pit there at Mt Olympus. That was where the oxide ore body was mined by Super Resources back in the early 2000s. There's obviously just a forward-looking statement you can read at your leisure. I should mention this presentation was put out as an ASX announcement yesterday. So if you wanted to go back on this at any time, that's the best place to go find it. So I'm just going to start. I guess these are the investment highlights, but I'll go into more detail with the following slides. But as we've announced, we've now retained 100% ownership of the Ashburton Gold Project, which is previously under an option to be acquired by De Grey Mining. And of course, Northern Star then took over De Grey Mining in May this year, and they had assumed that option agreement, but they have elected not to execute that deal. In their words, they wish to just focus on the development of the Hemi project, which they've already paid $5 billion for, still have more money to spend, and they'd rather focus on that. So that's how we've got the Ashburton Gold Project come back to us. But what's interesting is that we granted De Grey the option to acquire in the subsequent due diligence period. We originally inked that deal in February 2024. And since then, the gold price has gone up something like Australian $2,000 an ounce. And that has significantly improved the economic potential of this project. So now that we've retained the project, we've now announced a scoping study. It is fast-tracked for completion in the fourth quarter this year. De Grey Mining and Northern Star, in the 18-month due diligence period that's just passed, they've done a substantial amount of technical work that we will actually benefit from. And the scoping study at the moment is just based on a single open pit optimisation of the Mt Olympus, West Olympus pits into one large singular pit. And the optimisation has produced, just for the open pit, 772,000 ounces at 2.53 grams per tonne gold. And that's a very healthy grade for an open pit mine in Western Australia. We also have a very high attraction valuation versus our peers, and I'll go through that shortly. And we're just focusing on the Mt Olympus, but there is great potential elsewhere, both in the broader regional exploration sense, but also we have other resources nearby. There's actually 4 resources to be exact. And we have an experienced team, and we've even got a very experienced person leading the scoping study. So just to sort of give you a little bit of context, we purchased Kalamazoo, we purchased the Ashburton project from Northern Star back in 2020. And at the time, it was on a basis of a deferred consideration whereby we would pay Northern Star $5 million upon production, as well as an ongoing royalty. Now, in 2024, we had actually done a significant amount of work in that time, between 2020 and 2024, including updating the mineral resource estimate. And we then signed the agreement with De Grey to acquire the Ashburton for $33 million cash. It included a non-refundable $3 million option fee. And also they would take on the other liabilities such as Northern Star's royalties and production payment. So all up, there was actually a $50 million deal at that time and at that gold price. Now in 2025, in May, Northern Star completed its takeover of De Grey. And then they decided that they wished to just focus on the 11 million ounce Hemi gold project for good reasons. And hence they've elected not to go through with the Ashburton deal. So again, what's really important to note is that since we inked that deal back in February 2024, the gold price at the time was Australian $3,100 per ounce. It is now approximately $5,100 per ounce. So we've immediately commenced the scoping study, and that's going to determine the optimal development pathway for the project, and importantly at the enhanced value due to the much higher gold price. And obviously the scoping study is actually the first stage before entering into any feasibility studies. And of course, those, again, we're able to fast track this process because of the substantial amount of work that De Grey and Northern Star did during the due diligence period in the past 18 months. So as I was saying, there are a few resources in the in the Ashburton Gold Project, the largest one being Mt Olympus and the extension of that called West Olympus. So of the 1.44 million ounces, a bit over 1 million ounces at Mt Olympus, which is where we're initially focusing on in terms of open pit development. But obviously there's another nearly 400,000 ounces still in the area, which obviously points to potential mine life extension and obviously more growth to be had for the project. But overall, we put out in 2023, we put out a new updated mineral resource estimate at 16.2 million tonnes at 2.8 grams per tonne, which is very high, particularly for the Pilbara, for a total of 1.44 million ounces. So like I said, we've already pressed go on the scoping study, and we've already announced some consultants have already been signed up. Mainly, first of all, we've got BHN. They're mainly the processing consultants who are going to look into the processing options. NTEC as well. They're well-regarded mining consultants who'll look at designing the mine and optimising the project, the pit, as much as possible. Importantly, we've appointed Simon Coyle as the project manager to lead that scoping study. He's actually a former GM of operations for Pilbara Minerals, and he also has other commodity experience, including gold. An experienced mining engineer who's going to help us get this to completion in the fourth quarter. And the purpose of the scoping study will set out the optimal mining and processing routes, and also optimise the best financial parameters, OPEX, CAPEX, that sort of thing, as well as optimise it for the best possible economic return. Importantly, during the last 18 months, during the due diligence period, De Grey particularly did a lot of work. They drilled something like 10 large diameter metallurgical holes, and a lot of that work has since been completed with metallurgical testing. I'll talk about some of those drill results as well. Next slide. They've remodeled the mineralisation. They've also done geotechnical work, some more geochemical studies. They've done some new mine surveys, and they've even done a project-wide gravity survey, which is actually important from the regional exploration point of view. Of interest really is that they've spent something like nearly $3 million, which of course is effectively a free kick for us, and helps us to get to where we need to go faster. And the metallurgical test work is of a very high standard. This is just an example of the De Grey drilling. It's important to note that these drill holes were drilled into the actual mineral resource, the ore body itself at Mt Olympus. And the purpose of this was to collect metallurgical samples for testing from a processing point of view. Importantly, this is obviously an independent verification of the resource model by another party. And if you look at these results, some of the best ones here, I'll just read a couple of them. 47 metres at 5.5 grams per tonne from 30 metres depth. 55.5 metres at 4.1 from 177 metres. 31.8 at 3.3 from 132 metres. And 15.3 at 6.5 grams from 69 metres. Now you'll see that these holes are spread out across the resource body. Like I said, it's an independent verification of the ore body. These numbers are cracking numbers. Anyone would be happy to see these sort of numbers, and it just shows how robust this resource model is, and the potential of this particular open pit proposal. When we did the mineral resource estimate we released that. We've completed it in late 2022. We released it in early 23. At the time, we did the optimisation of a pit shell design on Mount Olympus, and it was also a separate pit for West Olympus. That was done at an Australian $2,600 per ounce, and just a reminder that it's now currently sitting at double that now. Now, compared to our peers, 16.2 million tonnes at 2.8 is very healthy for Pilbara ore deposits. I think Hemi's grade's about 1.2 grams per tonne, and obviously over 1 million ounces gives us potential for good scale. The work that we did resulted in a 10% increase in grade up to 2.8 grams per tonne. Importantly, 2/3 of it, 68%, was increased of that was in the indicated category, the higher confidence indicated category of ounces. And 75% of those ounces are actually in the Mount Olympus, West Olympus area, where we improved the grade by 24% to 2.7 grams per tonne. Now, in addition to that, there are exploration targets, and we can't call them resources. There are some mineralisations that have been intersected, but the density of drilling's not enough to declare a resource. But there is an exploration target both underground and around Mount Olympus that of approximately another 170,000 ounces. So obviously that was done back in 2022. In June 25, we got CSA, or now ERM, to redo those optimisations at conservative values of Aussie $4,000 and $4,500 per ounce. And in the table here, you can see that we've, at $4,000 per ounce, we've increased the gold, in situ gold amount to 735,000 ounces, which is a 12% increase on when we did this back in 2022. And 4,500 ounces, it grows to 772,000 ounces, or 17% higher than when we first did it back in 2022. This is just an example of the optimisation, the pit shells. I believe that, so the blue is at $4,000 per ounce, and pink is at $4,500 per ounce. Importantly, the Mount Olympus and the West Olympus originally, with the original optimisation, was actually two single pits, separate pits. But at these increased prices, we've actually managed to make it into one big expanded singular pit, which is obviously a cost saving in itself as one large operation. Back in 2022, we did our own test work on the Mount Olympus ore body, and we just did a very simple off-the-shelf flotation circuit, a simple crush, grind, rougher flotation, multi-stage cleaner circuit. And it produced a saleable concentrate that provides the simplest, least capital intensive, easy operation process route for the Mount Olympus sulphide mineralisation. And that's the way we're sort of heading to now. That test work produced what you describe as a clean, high payable concentrate, where we would expect to get something like 80% payable from the mine gate on that concentrate. So the difference with De Grey is that they were going to produce the concentrate on site and then put that through their POX plant at Hemi. We're obviously not going to build a POX plant. We're just going to leave it at this particular concentrate stage, and that is the plan so far. From a development and exploration upside point of view, as I pointed out, there's an exploration target of something like 170,000 additional ounces as an exploration target around the Mount Olympus open pit and underground mineralisation. Nearby, there's an underground potential at the Peak deposit. It's a very short distance nearby to the existing Mount Olympus pit. That's currently at about 210,000 ounces at 3.4 grams per tonne gold. And there are some other smaller resources elsewhere at War and Zeus that can add another 150,000 ounces to the inventory. And in addition to that, there are other exploration targets in this area that's very well mineralised, and we do have a large ground holding, and we do have plans to explore them simultaneously as we push the Mt Olympus open pit into development. And in terms of development, we're now looking at what we think is the low capex scalable flotation development model, which we think is the easiest, simplest way. This is off-the-shelf technology. This is nothing innovative or that requires any great risk. And it's a simple crush, grind, and float process to produce a clean, high-payable concentrate. And of course, there's always potential third-party toll processing that might be available for any other stranded deposits in the region. We've also published this in our original announcement. We went to the trouble of doing a peer comparison of similar companies at this stage of their life, and this was done on an enterprise value divided by their total mineral resource. And the average for all of these companies come out at about $98 per ounce, and you can see Kalamazoo there at the bottom there at $17 per ounce. We personally believe that this project should put us back up with those other companies at that much higher average of EV per ounce. And I think that's where the true value and opportunity lies for investors with Kalamazoo, is that we are obviously very undervalued. Obviously, the news that we've just retained this gold deposit is brand new, and we would like to think that you will see a re-rating of us and an increase in our share price and market cap over the short to medium term. And of course, underpinning all this, I don't have to, I guess you all know this story, but obviously the gold price has had an incredible run. It remains quite high, a record all-time high. And of course, compared to when we originally inked the deal in 18 months, it's gone up substantially. And that's made a big difference to this project. So obviously we announced a placement of $2 million to major shareholders, directors, and sophisticated investors. This is primarily a chairman's list, and directors have also taken up a portion of that fundraise, which I think speaks volumes when the board put their money into the project themselves. They've got real skin in the game. But the directors' funds are actually subject to a general meeting that will be held as soon as possible, probably in the next sometime in the next 6 weeks or so. The funds, they'll be used for paying for the scoping study and for general working capital. And the indicative timeline is that we are hoping to complete the scoping study in the fourth quarter of 2025. And hopefully soon after that, the announcement of a PFS, pre-feasibility study. And from that point onwards, there'll be more work being done, including drilling, further optimization, and then obviously the engagement of other partners in the developing the project. I really won't dwell on this slide too much, other than to say that we have 241 shares on issue. That's a pretty tight register for a company of our size. The top 5 hold about 40%, including board and management own a significant portion of the company. Again, pointing to the fact that we have real skin in the game. And obviously, we've just raised $2 million. That will see us funded for quite some time. And that's just how there's the parameters for the enterprise value per ounce. So I'm going to stop sharing now, and I'm now willing to take whatever questions you may have.
Yeah, thanks, Luke. Great presentation, and yeah, you can certainly see the real potential for a re-rate looking at that very interesting chart. So, look, there are a couple of questions that have come through. If you'd like to ask a question, please just use the Q&A box that's down the bottom of your Zoom screen. We'll just run through the questions, Luke. Can you clarify the reason behind NST walking away from the option agreement? The question goes to say, is it simply because of Hemi, and NST not wanting to pay the $33 million?
Well, I mean, they just paid $5 billion for the Hemi. Apparently, they're planning to spend another $1.3 billion, and $30 million is not even a drop in the bucket for them. So the price tag wasn't much. The current gold price, if go into production now, it's worth about $40 million to them in royalties and production bonus. And quite frankly, they've got no issue with the project itself. They just said that they want to focus on Hemi. That's where they're going to put their money in. And so, a 700,000 ounce open pit, 290 kilometres away, is more of a distraction for them. So and they've been more than supportive for us. And of course, they still retain a royalty and an interest in this project. And they've been very supportive and wishing us well, and hope that this actually gets up.
And how helpful has the information that they've provided, that they've done over the last 18 months, been to you? And how will that help with the scoping study?
Well, they spent something like $3 million. They spent many months drilling those 10 metallurgical drill holes. The metallurgical test work themselves takes months, resurveys and stuff. This is all work that we would have to have done. So the benefit of them not executing the deal and providing us with this data has given us a real free kick, effectively about $3 million worth of work that we would have had to have done ourselves. And obviously that takes months to do. So it's actually a really good result. Some of the stuff is still being compiled, but we are already receiving that data now. And that's why we've been able to start. We've already started the scoping study. We had a kickoff meeting this week, and the data's coming in, and it's extremely valuable, and it will help advance the project quickly.
Excellent. Luke, what's the potential for further resource expansion? Is there an opportunity to dig deeper, find some more resources down lower, and potentially justify underground mining?
Yeah, actually, in our original optimization study back in 2022, we did actually have an underground optimization. There was an underground plan, but at the moment we're focused on just the open pit. We feel that that's where we should focus to progress the development of the mine itself, where then we can add on the underground potential a bit later on. So the underground potential is there, and it could be in the order of about 170,000 ounces. The drill density in that particular mineralisation as we go a bit deeper is a little bit lacking. There's definitely drill hits there, but we need to fill in the drilling there to confirm it up a bit more. So there's that. Like I said, Mt Olympus, of the 1.44 million ounces, the resource, Mt Olympus makes up just over 1 million. There's another 400,000 ounces in the other deposits nearby. And so, yeah, there's extremely good potential to extend the mine life and grow that resource. But we obviously have to focus on getting the open pit going first, and then we can then focus our attention on the other resources.
Excellent. And just in regards to the open pit, it might be a bit early for this, but question has been asked, is there any indication about the strip ratio? And will it be similar to the strip ratio on previous mining?
Yeah, pretty much. We're looking at a strip ratio of about 13 to 1. But, the grade makes up for that. The fact that the ore body is pretty consistent, it's not all over the place. It's a fairly consistent. You saw those drill holes across the resource there. There's some big, thick, high-grade intersections. So that makes up effectively for the strip ratio. But, yeah, to be honest, it is a little bit early. That's what the scoping study is designed to work out and optimise that. We've done our own internal modelling. We're very confident it's going to be positive, but until the scoping study comes out and optimises that mining schedule and method, then we can probably talk a bit more confidently about the numbers.
Yeah, great. Obviously, up until this week, people thought that Northern Star had their hand on this project. And we're seeing over the last 18 months, 2 years, plenty of M&A in the gold space. Do you feel that there may be some other interested suitors out there in some shape?
Oh, look, because we had signed this deal, I've been looking for a replacement advanced project myself, gold project, for the last 18 months. And to be honest, they're very hard. They're highly sought after, and everyone wants one of these. So yeah, look, we've had people put their hand up and say they like to have a look at it and stuff like that, but we're just going to focus on the scoping study and pushing it forward, and that's going to take 3 months. But yes, there's a lot of M&A at the moment, and I wouldn't be surprised if people are running the ruler over us, to be honest.
Yeah, well, especially looking at that EV ratio price compared to previous. Look, just one last question. Just can you provide any further detail just about the MET process? And someone's asked, does the Albion process get a look in here? Noting that NST's done some work with that in the past.
Yeah. Northern Star, before they shelved the project back in 2013, that was when the gold price was US $1,300. They went down looking at the process, which is known as the Albion process. It's a patented thing from Glencore, I believe. Yeah, what happens with that is that actually produces gold. So rather than a concentrate, it will ultimately produce gold doré. We're actually looking at it. It is one of the options, but the problem with the Albion process is not many people are using it at the moment, as I think there's only a few globally. Probably the biggest problem for us at the moment is it actually involves a pretty high capex up front. So the process that we're sort of favouring at the moment, which is just a simple concentrate process pathway, is the lowest capex, lowest OPEX, and hopefully I think the economics will stack up in its favour. But we have actually had a good look at the Albion process. It's just one of the issues is it's very high capex up front. Okay. And so that to me makes it a little bit more difficult. But the advantage of it is that you will actually produce gold on site. So yeah, it's something that we're looking at.
No worries. Well, I know you're heading to Diggers next week. I expect you'll be pretty busy and lots of conversations about what's transpired over the last week and now that Kalamazoo retains that ownership of the Ashburton Gold Project. We don't have any more questions, so I'll just hand it back to you just for the closing remarks before we sign off.
Yeah, well, thanks for the opportunity to speak to everyone. More than happy to take questions offline if people want to contact me. I think the key message is that we've got a very good gold project, and at the current gold prices, it looks very attractive to people. The scoping study is going to be fast-tracked, so we'll have results in about 3 months or so. And I'm reasonably confident it's going to be a positive outcome that will push us towards pre-feasibility, the next stage. But I guess the other key thing is that you look at our market cap and our share price, and that graph I showed about the enterprise value per ounce, and we are very undervalued at the moment. And I wouldn't be surprised if we start seeing a re-rating and an increase in our share price and market cap over the short to medium term, once people get their head around the fact that this is a very good project that looks like a very viable project.